Now, as we head into Sunday's overnight session and the upcoming week, it's going to be interesting because even though we've been bullish over the last couple of days here, primarily today, ES is now going to be heading into the prior balance that we broke down from. So this is going to be an area where you're going to be running into much better resistance. And given that our intermediate term bias is going to be most likely either bearish or neutral bearish as we head into Sunday and Monday, there is still potential for sellers to be active, especially when the market runs into a stronger area of resistance. So, for example, if on the upside, let's say on Monday, the market pushes up into one of the stronger zones above, that would still be a very good spot for sellers to step in. If we look at the daily chart here, we can see this is the swing high before that big move down. But even if we measure it from here, it can give us at least some indication of where the market may start to run into some trouble. And you can see that we're essentially popping back up into the 50 to 61.8% of this swing high to swing low measurement. And this can be a friction point in the market. So heading into the upcoming week, even though today was quite bullish, and given how bullish it was heading into a weekend especially, there can certainly be a bit of follow through. But just keep in mind that, in the event that the market drifts higher, especially in the overnight session on Sunday, sellers can be active at as early as 40.55 quarter to 63 quarter, and even more likely to get a better sell response off of a zone like 40.6875 to 78.75. That would coincide with the 61.8, which is typically a very significant inflection point when you have this kind of pattern in play. And the other reason that we can expect sellers to be active over here is that the market has moved from the bottom of the range, and this was the range that was in play, right? These 4 or 5 days over here, that's what built this balance area. And what we've seen is a false breakdown below it, but now the market has pushed straight up through it in a very short period of time. So it is overbought, it is getting overextended, it's going to be running into better resistance. And I think that given our intermediate time frame pattern or bias, we can anticipate and expect sellers to be active at the resistance zones as we push into this previous balance area. So on the upside, like I said, sellers could step in as early as 55 quarter, 63 quarter, but then as you push higher, you are running into better and better resistance, and you are getting more and more overextended. And if you continue to go up without any kind of balancing or consolidation, that is when the markets are more prone to a sharp retracement. So it would be in the best interest of buyers to actually get some consolidation up here and some balancing, because that is how the market works off an overbought or oversold condition. And that would actually build a better foundation for the market to hold and launch off of. But if we just continue heading higher, especially Sunday night, the market would be getting quite overextended, and it would be prone to a sharper pullback. And buyers recognize that, right? When the market goes too far too quickly, buyers recognize the increase in risk and the decrease in the remaining reward potential. And that just adds to the potential for rejection and retracement. And any new buyers that jump in at those higher prices are typically the weak hands, and they typically bail on even the first sign of weakness, and that just accelerates the pullback And that's what creates, or at least that's one of the things that creates the environment for a sharper retracement. So that's something we're going to be on the lookout for as the market heads up into these areas of resistance.